I have Kristina Mueller here from the Real Estate CPA. She's a senior associate at the firm. Kristina has done an amazing job at our firm, like building out, I guess I can say that, right? Building out our accounting practice and making it more cost effective for the larger landlord audience, which has been really, really cool. So today she's here to go over best practices that landlords should be utilizing. I believe that you've got some integrations that you want to go over and things like that. This was a well-attended session last year and really good feedback last year. So I'm pumped for it this year as well. I will be in the background. I'll have my mic muted. I'll also have my video off. And if you need me, just shout.
Awesome. Thanks, Brandon. Let me go ahead and share my screen. Okay. Let's hit present here. All right. Thank you everyone for joining me today. As Brandon said, I am a senior accounting advisor here at the Real Estate CPA. Originally, what I started with was building out these custom accounting systems for real estate investors and making sure their accounting system worked best for them. And then as Brandon also stated, we've now grown a bookkeeping service line here, making sure it's affordable, but again, making the real estate investors, your guys' life, so much easier when it comes to the accounting. So really what we're going to go over today is how to keep good books, how to keep good record keeping if you're doing it yourself, some things to look for if you have a bookkeeper doing it, all around just best practices here. The presentation is going to be more of an overview, and then we'll open it up for a lot of Q&A. Okay, so let's first talk about the importance of an accounting system. Essentially, what our goal here with the accounting system is building something out a little bit more intense than just a regular spreadsheet. And yes, spreadsheets work great, especially if your operations are smaller, but if you're trying to scale your operations or you're spending too much manual time doing the accounting or bookkeeping, this is why we suggest setting up an accounting system. And the biggest thing here is to make the system work for you. So whether you're using a smaller accounting system platform or even a larger one, more robust, as long as it works for your operations, that's really what's going to matter here. Okay, so why is this important? There's a handful of reasons. The biggest one is that it's going to increase your productivity. So if you're not spending time manually doing bookkeeping, manually adding transactions to a spreadsheet, that means there's more time back in your hands where you can do what you're good at, which is investing. We have investor after investor tell us, I'm not really good at the books and this is taking me too much time. And really you should not be having your time tangled up in the accounting systems, especially if that's not your specialty. The second reason here is that it's going to mitigate your risks. So a lot of these accounting systems automatically have systems built in place that are going to alert you if something looks wrong. So they're either reconciling your bank accounts to make sure that you're not adding duplicate transactions, which we'll get into a little bit later today, or you have things that alert you when you're not tracking things correctly. These accounting systems are super smart and they're built out to really reduce your risk. The third point here is consistency and reliability. The biggest pain point I'm sure you might have with your accounting system is that you wait throughout the entire year and try to cram in a whole year worth of bookkeeping at once. And what this does, one, you're not being consistent and you don't know what's going on in your operations month after month, week after week, whatever it is. And two, you're adding so much more work for yourself. So that consistency there, it's really easy to plug and play with accounting systems set up. Additionally, you can't just go in and delete an accounting system like you could accidentally delete an unsaved Excel file. So we really like how reliable they are and how they keep us consistent there. The next one is accuracy. Of course, we're going to want our accounts and our books to be accurate. If they're not accurate, then how do you know what profits you're making? If you have more cash to go invest, If you're bleeding on one property and doing great on the other, accounting systems are really going to allow you to increase your accuracy because of all of the reasons we've listed above. And the last one, and possibly the most important one, is that it's going to save you money. And I know setting up an accounting system and potentially paying a monthly fee doesn't sound like it's going to save you money, but think about it this way. If you're doing all of your record keeping and it's accurate and it is clear and concise, when you hand that over to a tax preparer or your tax accountant, they can easily identify what expenses you have and where you can maximize your deductions. Versus if your accounting doesn't make any sense and it's on an Excel sheet, they really can't help you any further. Additionally, I'm sure some of you have run into your tax preparer also might charge higher fees towards year end to do the bookkeeping for you. And it's really going to, one, add up because you're paying for their time and you're paying for a rush. So if you're doing it on a month-to-month basis, keeping up with it, you won't then have to go in and pay that year-end fee. Okay, so now let's talk about the tools for success here. Some of the softwares that you can use. Let's start with the most important, the accounting software. We have tried so many platforms here at the firm, really testing out and seeing which ones we like best, which ones work best for our clients. As accountants, and also from a client standpoint, from a user standpoint, we find that QuickBooks Online is the most user-friendly, and it's also going to be the most robust, so you can complete all of your accounting in the one system. That's not to say other systems aren't great, but this is the one that we time after time recommend. The next thing you'll need is a receipt management system. And what we do here, we'll go in and talk about why you need the receipt management system a little bit later in this presentation. But again, we're going to recommend QuickBooks Online. And you might not even have known that QuickBooks Online has a receipt management system, but it's pretty awesome. And if you pair it with that accounting system, it's going to work really great for you. The next thing is payroll. So if you're doing payroll yourself, maybe you're establishing an S Corp or whatever your situation is, you're definitely going to start to need to pay yourself or pay employees. We really like Gusto for this. It's very user-friendly. It's going to allow you to run the payroll yourself, and it also integrates with QuickBooks Online. So no more manually entering your payroll liabilities, all of the different taxes you've paid. Gusto, every time you run payroll, does that for you and translates it into QuickBooks Online. And the last thing I'm going to touch on here just briefly is property management solutions. Now with property management solutions, it's just that, a property management solution for property managing. It's not an accounting system. So this would be a good tool to enhance your accounting system, but it's not going to be the one-stop shop solution for you. With the property management solutions, you're still not able to capture all of your operating expenses. A lot of these don't allow you to connect credit cards if you're running transactions that way. So yes, while the systems are great, they're still not accounting systems. Okay, so let's talk about best practice tips. Okay, if you can take one thing away from this presentation, the single most important information you need to know about doing your accounting for your real estate investments or any business is that you should not commingle your funds. That means if you have business transactions and personal transactions, they need to stay separate in separate accounts. It's just a nightmare waiting to happen. You're going to spend so much time sorting through which transaction was for what, and it's just not worth it. So what we suggest here is go in and set up separate bank accounts for each of your businesses. Business A, they have their own checking and credit card accounts. Business B, they have their own checking and credit card accounts. And then your personal, completely separate. This is really going to be important, especially when you start to bring in partners investors. And if you're trying to get loans and things like that, we've also seen lenders say, all right, well, I need accounting records or I need bank statements just for this operations. So that's where it's going to be really important. And hand in hand with that is keeping your accounting records for each business separate as well. So if you have, again, property A and it's got, let's say 2 partners, and then you have business B and it's got a different set of 2 partners, keep them separate. It's going to be really important, especially when it comes to the capital and each partner's role in those businesses. Okay, now the fun part, keeping all of your documents and records. This is probably one of the biggest pain points we see. What the IRS suggests is that you keep all of your supporting documents for 6 years. 6 years is a really long time. And to keep 6 years of shoeboxes full of paper receipts and documents, I mean, that's just going to be tough. We follow when we like to suggest this IRS suggestion as well, because in case you ever get audited, then you can go in and say, well, here's my 6 years of receipts. I followed the recommendation. What we really suggest here is utilizing that receipt management system. The worst case scenario, like I said, is you have a shoebox that you have to sort through, or you don't have any receipts at all. That's not going to be helpful in any scenario. Our top pick, like I said, is going to be QuickBooks Online for a receipt management system. What it does is you pay for your QuickBooks Online subscription for your accounting, and it comes with it. So your receipt management system is in that one subscription. You can upload your receipts directly there, and you can match them to your transactions. So you're not handling 2 softwares, and it's very streamlined. Everything is right in that platform. The most cost efficient, however, is probably going to be something similar to a Google folder. So open up your Google Drive, get yourself a folder, label it by the month and the year, and take a picture or scan in, or however you want to do it, upload your receipts to your Google folder. Okay, so now let's move inside of your books. Once you have an accounting system set up, you always want to be operating in your cash basis, your cash accounting method. And what we mean by this is every time you receive money, that's when you're recognizing the money. So every time you receive income, you recognize it right then and there, versus what people are traditionally familiar with, which is the accrual method. We do your tax. If you're a real estate investor, your taxes are done on the cash method, and we want your books to match that. So we're going to record your books on the cash method as well. Additionally, when you're inside of your books and you're keeping track of everything, we're always going to suggest, especially if you have multiple properties, that you track by class. And what this is essentially tracking by property. It's just really QBO's term for tracking by different categories. If you decide to go this route, this is going to be with the QBO Plus subscription. We always get asked that. That's going to be the subscription that's going to allow you to class track. And essentially what it is every time you have a transaction, you assign it to the category it belongs to. So let's say it belongs to repairs, but then it's for property A. So you also assign it to property A. And what that allows you to do is record your income and your expenses for each property, and you can look at that on a per property basis instead of wondering, okay, which goes here, which goes there. And also that's how your tax returns should be filed, on that per property basis. And the last little tip here that we like is creating bank rules. So again, making that accounting system work for you. These bank rules are meant to make your lives easier. So what a bank rule is if you go into QuickBooks Online and you have multiple reoccurring transactions, what you can tell QuickBooks and the AI there is, hey, if I have a transaction that has a description that says bank charges and it's $5 every month, automatically assign that to bank charges and fees. And what QuickBooks does is every time that comes in, it assigns the transaction. Now that's one less transaction you have to manually add. Okay, so now we want to, after you're going in and you're doing your accounting, or you have someone else doing your accounting for you, you need to conduct regular reviews. Whether you're doing the books yourself, you have a bookkeeper, you're paired with your favorite CPA firm over at the Real Estate CPA to do your books for you, you need to go in and review what's going on, especially if you have a third party in there, because they're not the one running your operations. While they can be as accurate as possible, you still need to go in and make sure everything aligns with your operations. So first, if you're going in and doing the books yourself, or you have a bookkeeper, make sure your bank accounts are reconciled monthly. What that means is going in and taking your bank statement and comparing it to the transactions that ran through your accounting system. This is going to ensure that all of the transactions ran through your account, as well as there's no duplicates. So it records the cash balance as the same that's in your bank account. That's going to be very important. The next piece here is reviewing your reports. So we always like to review a balance sheet comparison, so you can compare the current month to the previous month, check out your cash balances, your fixed assets to make sure that they remain the same unless you're purchasing or selling property, your liabilities, make sure they're capturing your current principal balance on your loans, and then your equity, and make sure those capital accounts are looking correct. Then with your profit and loss by class, like I mentioned previously, what this does is it compares your income and your expenses by each property. So you're going in there and making sure all of your income, all of your expenses are assigned to the correct property and allocated the right way. And those are going to be the best ways to get the high-level review. One really important thing to remember in all of this, what's the reason we're doing this? It's because understanding your accounting means that you can understand your operations. Really, the accounting tells the full picture of your operations, at least if it's done correctly. So in order to understand your operations, understand your cash flow, and everything in between, you really need to understand what's going on inside of your books. And lastly, what I just touched on, your key reports, there are a few things in each of these reports that I always go in and look for to make sure they're captured correctly. So let's start with the balance sheet here. This is mainly going to apply to my landlords or my buy-in holders. When you have a balance sheet, what you should always reflect as your fixed assets are going to be the acquisitions you have, the properties you own. Where you can find that information, it should be on your tax return. You can ask your tax accountant for the depreciation schedule that will detail the building, land, loan cost basis of the properties, as well as the depreciation, and that should match your books completely. The next piece we have here is your liabilities section. Your liabilities section is going to be home to your mortgages, your loans, credit cards, things like that. What we need to make sure, especially with your mortgage accounts or your lender accounts, is the only thing that you should be capturing there are principal payments. So what I mean is, if you pay your mortgage $500 a month and it's not in a principal only payment, if 300 of that goes to interest paid and only 200 of it is for principal, we need to make sure your books reflect that. So being really cautious about only capturing principal payments to your liability accounts. And lastly, your equity section. This is going to be important, like I said before, for your partners, especially if you do have them, partners, investors, any of that. Each partner should have their own capital account. So you want to see how much money they're putting into the business and how much money they're getting out. This is going to be crucial for your tax preparation. You know, the K-1s that you get every year or that you need to send your investors every year, your tax preparer is likely pulling this information from your balance sheet in the equity section. So you need to make sure that that lines up with what actually happens in your operations. Moving on to your profit and loss statement. Your profit and loss statement is also called your income statement. It's going to show your income and your expenses for the year. What we see typically is a few mistakes here between our flippers and our buy and holds. Flippers, will start with you. If you're flipping a property, all of your expenses related to that property should go into a cost of goods sold category. That way, when you sell the property, you're taking the income minus the direct expenses and getting your final profit there. And that is going to show, okay, hey, it cost me $100,000 to really sell this property to get the income. That's what the cost of goods sold do for you. You want to make sure you're recognizing those expenses in the year that the property sold if you're a flipper. For my buy and hold friends here, any expense related directly to your property should be in your expense categories, not your cost of goods sold. It's going to be very important so you can reflect it accurately and hand it over to your tax preparer and get accurate tax returns. Okay, so let's move on to our question and answer here. Let's see. Okay, so we have the first one here. What about Stessa as an interface for storing information / accounting? Yeah, Stessa, it is a good system. What we really like is QuickBooks Online because of how robust it is. However, the most important thing for you here is just to make sure the system works for you. As long as you're keeping up with the records and it works well, then we don't see any problem with that. Okay, Mark and Sandy say, I use QuickBooks Desktop. As tenants come in and go, I have accumulated many security deposits. What do you do with that? I'll eventually run out of account numbers. Okay, so what you should be doing here with QuickBooks Desktop, I'm not incredibly familiar since we always default to QuickBooks Online, but essentially you should only have one security deposit account, and you can account all of the security deposits for your tenants in that one account, and it can flow in and out of the same account regardless of which tenant it's for. Okay, Sue said, as far as I know, both Buildium and AppFolio don't allow you to download to QBO or QBX files. Is there another way to handle these transactions other than entering them manually into QuickBooks? So Sue, what we really like to do here is analyze each one individually, which technically there is a small workaround for it, but essentially you're going to be exporting that information and manually importing it into QBO anyways. Unfortunately, these platforms haven't come up with a good integrative system, but I will be going over tomorrow in our workshop about QBO and setting up your QBO system, exactly how to split out and translate those property management statements. It is a little bit cumbersome, but unfortunately, that's just the name of the game. Okay. Why do you recommend using the cash method instead of the accrual method? Okay, so the big picture here, the main goal with your accounting system is to match your tax return or to have tax financials for tax savings, essentially. So yes, you should be getting information about your operations from your accounting system, but the big goal here really should be saving you money. And what we do, your tax return is filed on a cash basis. So in order to make sure that your accounting system matches your tax return, you need to be on the same accounting method. In this case, it's going to be the cash basis. Okay. I only own 30 units and the property management systems you recommend can be too expensive or my portfolio might be too small. Can you use QuickBooks to track operations like you would with other property management systems? Okay, so technically, yes, you can. However, we really don't recommend that. We find that QuickBooks is not a good tool for property management, and it's going to require a lot of hands-on work to do the property management inside of QuickBooks. Can it be done? Absolutely. Do you need a system? Probably not. Like an additional property management solution. You probably don't need one if what's working for you is fine. However, when you start to scale your operations, that's when you're going to want to really utilize these tools so you're spending less time on this back end work. Okay, is there a significant difference between QuickBooks Online and the desktop version? It seems like the online version is much higher in costs over time. Okay, so really the difference isn't too much other than with the cloud-based system, which is QuickBooks Online, you're going to allow more teams to be able to help you. So essentially, if you ever want to outsource your work, if you want to bring in a bookkeeper and you're on desktop, your bookkeeper has to come to you to work on your computer that has QuickBooks Desktop. Whereas if you use QuickBooks Online, the cloud-based system, this is going to allow teams to remotely come in and work on your operations. Essentially, we find that also QuickBooks Online is a little more intuitive because it is, it's user-friendly and it's built that way. Okay. Let's see. This one question asks about Quicken. We do have some of our clients who have switched from Quicken to QuickBooks. However, we are not experts in Quicken, and we find that it's not as robust as QuickBooks Online. Okay. If I have different properties under different LLCs, under a holding LLC, do you guys suggest I have different credit cards for each? Okay, great question. So essentially what's going on here is that if you go ask an attorney, they might have a more specific answer for you. However, on the accounting side of things, specifically accounting, not from a liability standpoint, if you have all of your rentals and you are the sole owner of them, even though they're under different LLCs for asset protection purposes, it would be okay to use one credit card for those. So again, consult with an attorney on that, but from an accounting standpoint, that is absolutely fine. Okay. My PM uses AppFolio. Do I need to do bookkeeping outside of what the PM is doing inside of AppFolio? Great question. So essentially what your property management manager is doing inside of AppFolio is they're only keeping track of what's going on with your properties. Now, I'm sure you have other expenses here, whether it's related to overhead costs or you're buying new properties, if you have construction going on and it's not ran through your property manager, that's when you're going to want to bring in a different system or at least track the operating costs separate from what your property manager is doing. Additionally, if your property manager isn't paying your mortgage, then you're potentially not capturing those mortgage payments, which includes interest, which is deductible. So you're missing out on the tax savings if you're not recognizing those in some sort of accounting system, spreadsheet, things like that. What your property manager is doing is probably fine. However, you probably need something else a little more supplemental there. Seeing quite a few questions about QuickBooks Desktop. Just a disclaimer, again, we really push for QuickBooks Online. We find it's very intuitive, really awesome. And we don't use QuickBooks Desktop because we are a remote firm and we all like the cloud-based software, so we can collaborate a lot easier with our clients and with our team. Okay. Why would you put mortgage principal as a liability? I thought you can't expense principal, only interest. Great question. So what you have here on your balance sheet, when you capture your liabilities, those aren't considered your expenses. Only your expenses will be looked at to be deductible. And so your principal is not currently deductible, and that's why it goes on your balance sheet under your liabilities. So again, you capture your principal payments under your liabilities, you capture your interest under expenses, and your interest can be deductible, but your principal can't, and that's why you separate the two. Okay. In cash accounting, how should we treat prepaid rent? What are the two GL accounts you would use? Okay, yeah, so this is a little more difficult and where you're really getting into the accounting with prepaid rents. You're going to recognize the prepaid rent as prepaid rent in your income category. And then in the following month, you're going to probably have to do an adjusting journal entry to move that from prepaid rent to income in the following month. So that's where that weird hybrid of cash accounting rolls into the nature of property management, sometimes prepaid rents, which mixes with the accrual accounting. Essentially, we want to do our best to capture the cash when you receive it and recognize it that way. Okay. You mentioned for rentals that everything should go to expenses instead of cost of goods sold, but what about any capital improvements on the property, like a big roof replacement? Great question. This is something we run into a lot with our investors. Essentially, what we usually defer to in our firm as our practice is most of your expenses can be considered a repair and maintenance until your tax preparer tells you otherwise. So what your tax preparer is going to do is they're going to take a look at all of the things that you've called a repair and maintenance. And if they determine that that is going to be a value add to your property, they're going to say, all right, let's move that to your capital improvement section on your balance sheet, a fixed asset. Our other rule of thumb here is if your expenses are over $2,500 as a repair, that likely is a capital improvement as well. Again, it's on a case-by-case basis. So always make sure that you have itemized invoices for all of the repairs you're doing. So that way you have a stronger case to be able to deduct some of those repairs at the end of the year. Okay. Let's see, what about mileage and expense tracking apps like MileQ, Expensify, any favorites? Okay, I'm gonna sound like a broken record here, but QuickBooks, in that subscription that you purchased, that QuickBooks Plus subscription, by the way, not sponsored by QuickBooks, but what that also has is mile tracking in it. So that's going to be a great way to save money and not spend extra money on these extra softwares to track your miles. That's the one we usually defer to a lot. Another popular one with our clients is Mile IQ. Okay. Let me make sure I didn't miss some of these here. Keep sending in your questions. Okay, are monthly or quarterly transfers from real estate accounts to personal accounts breaching your advice on avoiding commingling? Okay, this is a great question. So essentially what you can do, transferring money from your personal account to your real estate accounts, that is going to increase the equity you have in your real estate business. So if I transfer $1,000 of my personal funds into my real estate business, that is increasing the stake I have in the real estate business. Same as taking money out. That's not commingling funds. As long as you are not paying for expenses using your business credit card or your business checking account, that is completely fine. The transfers are fine as well, as long as you are being mindful of the distributions and the type of entity that you have. I'm not going to get into the details there, as I'm sure we have some great tax presentations that have already covered it. And you should definitely, if you are worried about that, talk to your tax professional to make sure you're not pulling too much money out of your business. Okay, as of right now, I only have 2 units. Do you still recommend QuickBooks Online? Any other options? Okay, great question. Like I said, we want your accounting system to work for you. So if the cost of an accounting system is going to be way higher than what you're bringing in for your 2 units, it probably doesn't make sense. We usually see people start to get on these accounting systems around the 5-unit mark, 5 property mark. However, if it's worth it to you to get on a QuickBooks Online system for your 2 units, maybe you have a lot of activity going on there and spreadsheets are too cumbersome and too much work, then go ahead and do it. Just really take a look at your costs and see if it makes sense for you. Another great option though, again, I know I talked about spreadsheets, but if you don't have a lot of transactions going in there and you can stay on top of it, go ahead and keep track on a spreadsheet. Okay. If my property manager pays me net after expenses, do I need to maintain the books with detailed expenses spent by the property manager? Okay, great question here. We're going to go over this in detail tomorrow on the workshop, but essentially what we want your books to do is reflect all of your rental activity. So even though it's kind of a pain in the butt to go in there and capture all of the expenses and split apart these transactions, we want your books to match accurately what's going on with your rental activity. And that means going in and adding all of those expenses and all of the accurate income into your QuickBooks file instead of just capturing the net income from your property manager. This is also going to allow your tax preparer to take a look at the expenses that are being incurred by your property manager and see what additional deductions you can take there. So there's definitely a lot of added benefits from going in and taking the time and doing that. Okay. For your course tomorrow, when I learn how to build my books with a holding and property LLCs from the ground up. Okay, so thanks for bringing this up. Yeah, so essentially tomorrow we're going to start from scratch on how to build a QBO system. We're also going to be sending you a chart of accounts for your operations if you are a landlord or a flipper. That way you can upload and really capture everything there with us. It's basically going to be a QuickBooks Training 101. Set up the system, learn how to use the system. We're not going to deep dive into specific situations here, but we will be doing a very broad, most common things that we see.
Real quick on the workshops, we have 61 people registered, and I'm seeing a lot of questions on the workshop, so I just want to quickly get a gauge here. We're charging $179 for the workshops. There's a real estate professional status workshop with me at 11 a.m. Eastern tomorrow. It's 2 hours, and then there's the QuickBooks one with Kristina, and that starts at 2, right? 2 to 4 p.m. Eastern.
I believe it's 4 to 6.
It's 4 to 6.
Yes.
Oh, well, okay. Is it okay? Well, we'll confirm.
Okay.
No, yeah. 11 to, yeah, I think you're right. Yeah. Okay, it's 4 to 6 tomorrow. So my question is, so we charge $179 for access. You get access, you get additional materials. You also get the recordings for the workshop. You can purchase the general session recording separately. My question is, if you haven't already purchased the workshop access and you would like to, throw a 1 really quick in the chat, because I closed the sales down, but I'll open it back up if there's like people that actually want to buy. Okay, I see at least 1. Okay. Oh, okay. That's a lot of people then. All right. So tell you what, guys, Kristina, you can keep answering questions. I'm going to go open that sales tool back up, and I'll post a link in the chat here in like 5 minutes, and you guys can pick it up. Thanks.
Awesome. Thanks, Brandon. Okay. Next question here. For rentals, what expenses would be considered cost of goods sold, if at all? Okay, so really, if you have a rental, you're probably not capturing anything under your cost of goods sold section unless you sell the property. Then the costs at the time of the sale of the property are your cost of goods sold. So if you have a rental, you're likely capturing these as expenses, or as we previously talked about, maybe a capital improvement. Payroll for yourself and others, along with that same question, those are going to be more of operating costs, and your operating costs are always going to be regular expenses, not cost of goods sold. Will QBO work for both long-term and short-term rental properties? Absolutely. We love it for long-term and short-term, as long as you have someone in there kind of keeping up with the operations. Works really great for short-term as well. Okay. This is a great one. I'm sure many investors on this webinar don't currently use QuickBooks Online or any specific software. How hard is it to retroactively capture past transactions? Okay, great question. Essentially, what we're going to suggest here is that if you've already filed your taxes, let's say for 2020, and you're thinking, all right, it's 2021, I really need to get set up on an accounting system. What we suggest is you start in 2021. So if you start now, you really only have 2 months of retroactive transactions to do. And then what you do is you take a look at your tax return and you match that to your books. It takes a little bit more of a in-depth accounting, like kind of deep dive there with a lot of journal entries, but it is really doable. And it's a really great option, so you don't have to go back and retroactively capture years and years worth of transactions. How would you handle paying for a business expense paid on a personal credit card? Okay, this is a good one. You're going to need a few different systems set up here. Essentially, best practice is what you're going to do is say, all right, I spent $50 on my personal card. What I'm going to do is reimburse myself from the business. And then that reimbursement, when you see that expense come out, let's say it's $50 paid to yourself, that's actually captured as the expense. So let's say you bought office supplies for $50 for the business. Then what you're going to do when you pay yourself back is capture that $50 as your business expense, as your office supplies. Okay. Would you know how much QuickBooks Plus charges per property? Couldn't find it online. Okay, so QuickBooks Plus is a monthly subscription. I believe it's $70, which is quite expensive. If you go through an accounting firm, what they likely do will pass along their wholesale price to you. At least that's what we do here at the Real Estate CPA. If you're one of our accounting clients and we set up your QBO system for you, you pay $35 a month instead of $70 a month. And I believe that's up to 40 properties that you can class track with that one. Okay, lost my place here. Bear with me. Okay, will we need to have access to QBO to benefit from your workshop? Already signed up and want to know if I should enroll to best take advantage. Yeah, so some of the materials we're going to send out are going to be suggestions on which subscription will work best for you. If you want to sign up, we'll walk you through from scratch how to add all of the structure that you need. So if you already have a QBO system, but you don't know how to use it, we're going to cover exactly how to use it there as well. So if you have the subscription, it's probably going to work for you. If you don't have the subscription, it's definitely going to work for you. Okay. Sorry, folks, bear with me here.
Real quick, I just opened up the workshop recordings again. I'll keep them open for like the next hour and 10 minutes or so. Not to like do a, a hyper sales tactic by any means, but Kristina and I just need to know how many people are going to be in our workshop. So, you can click that link in the chat and it'll take you to the workshop page. You can read about it, watch the video that I recorded. If you put your purchase information in, the next page is going to say, do you want to buy summit recordings for the 28 general sessions? If you want to do that, then you can click yes, or you can click no, and then it'll complete the purchase. But if you click no on the general session recordings, you're still going to get the recordings for the workshops. So your workshop purchase also includes the workshop recordings. I hope that's clear. And Kristina, we'll send out an email about the workshops this evening with final confirmation on details and documents and stuff like that. So just if you sign up, you'll get an email later this evening. Kristina, I think we have time for one more question, if you have one more, and then we'll wrap it up. Okay, sure. Let's see here. Just trying to make sure we don't hit a duplicate. Do you have suggestions for integrating property management books with self-managed properties? Yeah, so essentially you're going to do the operations the same way. So you'll have your property manager who's probably dispersing those owner draws into your bank account. You'll have to manually split those transactions, make sure you're capturing the income and the expenses. And then when you're self-managing, what you probably see is the rental income deposited straight to your account and the expenses coming straight from your account. So you'll just capture those as they come in and go out versus your property manager who disperses at once, and you have to do a little bit more accounting there. But essentially those can be in the same set of books as long as it's under the same rental portfolio, owned by the same partners, investors, all of that. Okay. All right. Good stuff. Awesome. Thank you, Kristina. That was great. Thanks, Brandon. Thanks everyone for joining. Yeah, like I said, we'll be going over a lot of this stuff tomorrow on our QBO workshop, but hopefully this gave you a good basis of everything you need to do to start implementing QuickBooks, or not QuickBooks, any type of accounting system, but we do love QuickBooks.